Hey traders, hope everybody ever survived the carnage today. I'm going to get right into it, guys. I bought today's rally. I actually bought it twice. I added to my SPY position 2 times. I think that we're overdone. I think this market is just absolutely wearing everybody out. Volatility remains extremely high, but there are some signs that it's waning. I think there's some underlying strength going on. I could be wrong. My timing signal is barely hanging on to a bullish call. I would say a big down day on Monday, and I would probably end up getting a reversal, so I am taking on a little bit of risk here. However, I just have a feeling, and hopefully by the end of this video you'll see why. So I got to get moving on these charts. This is the VIXY, the short-term futures, the VIX short-term futures, and this looks really overextended. Negative divergence on the RSI. The ADX has been, it doesn't stay above 50. The actual ADX doesn't stay above 50 for very long. The positive DI line, it's forming a lower highs. Let me show you another chart here. So what I did was I took the Dow 60-minute, of which we did break down under this channel that I was watching. We do have positive divergence on the RSI. But this black line, this is the VIXY. And when it spikes up, like here, short-term bottom in the markets. Even here, short-term bottom in the markets. Here, short-term bottom in the markets. And we're at the highest point. And we're at another low here. So I'm thinking that this is short term, unless we're just going to fall off a cliff Monday. But as bad as today was, I think people are acting like we're hitting new multi-month lows, and we're really not. This is positive divergence here. Same thing on the Nasdaq. The financials held their ground today. Here's a chart of the daily Nasdaq, and here what these large green bars represent are spikes in the Nasdaq up volume. This indicates some accumulation. Yes, we have some distribution here, but technically we have the distribution before the accumulation. And that's a good sign. If it was reverse, if it was buying and then massive selling, then I would be a little worried. But this is a good sign. And also, if you check the advanced decliners today, here according to Yahoo, I would have expected these numbers to be more lopsided. Now, they were on the Amex, and I would have expected these numbers, the down volume, to be in the 90% range. On the Dow, it was only at 56. And So these aren't necessarily as bad as they could be. Let me go back here to, so here's the SPX. This is the bear wedge that everybody is watching. I don't know of a pattern out there that is being more watched than the bear wedges that are going on in some of these daily charts. And for that reason alone, it has me thinking that they're not going to play out the way everybody is expecting them to. I don't know of that many people out there that are buying this market. There was a survey done by Ticker Sense this week. I talked about it. I messaged on Twitter last week. So what they do is they survey a number of different bloggers, and they say whether they're bullish or bearish. And over the last 6 weeks, I've been bearish. And last week was the first time that I took the survey and I said that I was bullish. And there was a huge lopsided amount. It was 2-to-1 bears to bulls, and that's quite a discrepancy. So there's a lot of bearish people out there. Quickly, the dollar spiked up, is right at resistance. So, and it's right at the 60 level here. That it typically the markets, when they're in a bear trend, they will reverse. So I kind of expect the dollar to move lower. And then the last chart I wanted to show you is the TLT, and you know what? Okay, so basically this looks toppy. Like the inability for this to push higher has me thinking that this TLT is at a high